Have you ever seen those TikToks where they are like,
look at this.
if trading was this easy, every single trader would be driving Lamborghinis. But that is not the case. Let's talk about support and resistance first. Here's what traders expect support and resistance levels to be like. So you can see this is a resistance and this is a support, right? And then when price goes up to this resistance, they expect price to just like reverse and head back down. And when price go down to this exact support level, they expect price to just reverse and head back up and up, down like this, right? And then when price actually breaks out of the resistance area, they immediately enter for a buy position just to see that this was a fake out and price immediately went back down. And then when price break through the support level, they immediately enter for a sell position just to see that price reverses and head back up. Has this ever happened to you? Because this has happened to me so many damn times in my first year of trading. Because a lot of textbooks and trading gurus are just telling you that this is how you should be trading. Support and resistance, they are just two lines, But in reality, it's not this simple. It actually looks more like this. You can see price goes up, create your high, go down to a low, high, which breaks the previous high, go down to a low, high. It's just like random like this, right? When price consolidate, it's never just like sideways like this. No, it's like going high, this one higher than this high, and then this low, like breaking this low, and it's just like super messy. In this case, if you draw your support and resistance as just like one line like this, guess what? You have gotten like faked out so many times. So when you draw your support and resistance levels, do not just draw them as like one line. They are an area. So what I like to do is just draw like an entire area right here. So this entire area will be your resistance area, and then this entire area over here will be your support area. So you can see in this case, you could have drawn like a support level right here, right? But you cannot just be putting it as a line like this, because you can see what happens next. Price actually break through the support level and then it just reverse and hit back up. So this was like a total fake out. So when I say that support and resistance, they are not at exact level, they are an area. What I mean by that is that price will not just go to exactly 0.6913 and then reverse. It can go to an area around 0.6913. It can go to 0.689 and then reverse. So when you treat your support and resistance as an area on your charts, you don't get fake out as easily anymore because you know that they are an area. So when price actually do break out of the level a little bit, you don't immediately get into the trade because now you know that there is still a chance that price might reverse and head back up. So this is what your chart should actually look like. As you can see, I have highlighted my support and resistance as areas rather than levels. So you can see right here, there's this support area, and then price is broken out of this support area, come back up to retest it, and now it acts as your resistance level over here, and then break through this support level that we have drawn, and then come back up to retest it as a resistance area, and then break past, and then come back up and retest it, so on and so forth. As you can see, in all of these instances, this support and resistance, they are an area, they are not an exact level. Like you can clearly see right here, if you just place your resistance at this level, guess what? You have gotten like stopped out so many times and you have lost a whole lot of money. So make sure you treat your support and resistance as areas, not levels. Next, let's talk about trend lines. So right here, I've drawn my trend line, and as you can see, when price bounce off here, you end up went back down even further, bounce off, went back down, and then third time bounce off, went back down. So the next time price actually come up to this trend line, we are expecting price to reverse and head back down, right? But then you can see that price actually start breaking past the trend line right here. You can see that right here, price actually broke through the trend line. So what does this mean? Does this mean that price is gonna reverse and head back up already? Does that mean that we should enter for a buy right now? No, because you will have lost a whole lot of money because this is actually a false breakout and price actually went back down even further, which means that this trend line is still valid even though it was broken. So what do you actually do in this case? You need to remember that trend lines are just like your support and resistance levels, except that they are like diagonal instead of like straight. So you actually need to treat them as an area or so instead of just like one line like that. So instead of expecting price to reverse immediately when price touches the trend line, what you can do is that you can monitor price around this area. Around this area here would be your trend area. So around this area, you should be expecting price to like reverse and head back down. That's why you also need to start treating your trend lines as an area, because price can easily break through this trend line and still went back down. Next, stop loss. So in this example, we can clearly see that price is in an uptrend, so we should only be looking to buy. So let's say you enter for a buy right here. So if you enter for a buy right here, you know that you should place your stop loss below the last higher low, right, which is right here. This is the last higher low before price goes up. So you should place your stop loss right here and place your take profit at like the next key level or whatever, right? And then you can see that price eventually went up, but then it actually come back down and hit your stop loss. So if you place your stop loss right here, you would have gotten stopped out, but you actually end up seeing the trade go in your way and go up even higher and smash your take profit. But guess what? You got stopped out right here. Why does this always happen to you? Do you always ask yourself that question? How many times have your stop loss got hit just to see that the trade go in your way? I'm pretty sure a lot of times, because this has happened to me at least like 100 times in my first year. So there are two ways where you can fix this. Number one is to give your stop loss a little bit of breathing room by placing your stop loss a distance away from structure. So instead of placing your stop loss like exactly right here below the last higher low, what you need to do is to give your stop loss a little bit of breathing room by placing your stop loss a distance away from the structure. So this is what it actually looks like. Let's say you enter for a buy like somewhere right around here and you place your stop loss right here, right? So instead of placing your stop loss right here, you need to place your stop loss right here so that you can give your stop loss a little bit of breathing room so that your stop loss will not get hit. So if you actually place your stop loss a little bit of breathing room, the next time price come back down to retest this higher low, you will not get stopped out. Like, you will actually still be inside the trade, and now you can finally trade in peace. Now the second way where you can fix this is by entering the trade again. So in this case where you actually got stopped out right here, instead of like sitting there and crying about it and blaming the market, why not enter the trade again if it actually show you signs that this trade is actually going as you plan? But obviously do not be stupid enough to like just immediately enter the trade when you get stopped out. You need to kind of re-evaluate the situation and see whether like the trade is still going up or is price like going to go down right now. If price is gonna go down, then don't be stupid enough to enter the trade again. You need to wait for some sort of signs that tell you that this is actually like a fake out and price is gonna continue to go up even higher. So using the same example, let's say that you actually got stopped out right here. You place your stop loss right here and then price actually went down and hit your stop loss, right? But then you actually start seeing some sort of signs that show you that price is gonna reverse and head back up. Then in this case, this is when you can enter for a buy again. Just don't be afraid and enter for a buy again. And then this time, what you can do is to place your stop loss right here. A little bit of breathing room, right? Give it a little bit of breathing room. And then enter for the trade again as long as you believe that the trade is still gonna continue going in your way. If this video was helpful, make sure you smash that like button and hit on that subscribe button. And you can check out this video to learn about a trading strategy to implement whatever you just learned right here. Click on this video to learn more.